The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning. Hope everybody is having a fabulous Thursday morning. And as Steve mentioned there, I'm here in Santa Fe, New Mexico. Got a nice sunny day here. Beautiful weather so far this morning. I don't know if it's going to heat up. I hope not. We get some of these sort of dry desert winds. I had some of that going on yesterday. I'm looking out the window of my office here. I can see that it is quite windy out there right now. For those of you that have flown into New Mexico, probably Albuquerque, bigger airport, bigger city, you might have noticed that it's awfully windy flying into the desert. Can be a little scary if you're not accustomed to that. Same thing happens in Vegas a lot. If you fly into Vegas, those desert drafts. So in any case, here we are, just I'm checking the markets, what we got going on out there this morning. Looks like the S&P and the Nas struggling a little bit. We've got stocks moving off some earlier highs. Now, I noticed that this morning we had the New York Fed President, William Dudley, was talking to CNBC. Said one of the things he said was that he sees no further need for easing right now, kind of taking away the candy dish. I don't know, maybe you could look at it as taking away the crack pipe, because I think definitely there's been a component of some addiction to the free, easy money. So that's something we had, and I think looks like, yeah, moving off some earlier highs. Europe. Just, I've seen a number of stories in recent days, and I don't really understand the purpose of this, but I've seen a number of stories talking about how well the S&P would be doing right now, if not for Europe. Well, there's a lot of ifs. Just a whole lot of, if not this, then that. So you could always say, well, if this didn't happen, then this, we'd be a lot better off. But, Europe is out there, and that's kind of just I think it's kind of one of those straw man arguments to say the S&P would be doing a lot better if not for Europe. You kind of have to wonder, what's the agenda behind that? Who's planting those articles out there? Okay. Let's see. Wanted to take a look. Got some interesting. I put a chart for the IWM up there in front of you. Let's see. Kind of looking like some moderate gains last I looked. And there you have. Let's see. I'm looking in the Tiger's Den. Fed did a great job of helping mortgage rates and housing. I liked what you first said there, the housing, though. Yeah, the housing. It's interesting. What we're seeing in the housing market right now. Let me show you a stock that actually, one I've been kind of looking at lately, and I'll put a chart up for you there on Tiger TV. This is, let me get my correct keyboard here. I've got several different monitors. I've got a little MacBook in front of me that is not the one that I have my charts up. Okay, so this is one called Standard Pacific, SPF. And this is a California-based company, developer. They operate in about 7 or 8 states, I believe. And this is one that I'm watching. And we do have our Low Price Leaders newsletter that was launched about 6 weeks ago. And the latest edition of that went out yesterday. Check out the homepage, tfnn.com, if you want some more information about that. And this is one of the ones that I'm watching. Obviously, I'll give you a little hint here and there of what some of the content is. Now, this is a great example, and I'm going off the comment here in the Tiger Den, and yes, I was being sarcastic. I got that. But it is interesting because this particular stock, with regardless of opinion, and that's kind of what I was about to get at here. One of the big tenets of my investing methodology is to keep the opinion out of it. Because I'll give you a great example. A few years ago, maybe I don't recall the exact years. I don't have the charts in front of me, but it was maybe around 2004-ish, somewhere in there, 2005. And a good friend of mine, who was an excellent and very accomplished growth investor, growth stock analyst, he had really not liked oil stocks, because he did not like the underlying risk of the commodity, some of the economic news back at the time that he felt could have an effect on some of these oil industry stocks. But nonetheless, regardless of the stories, regardless of the news, the stocks kept rising. And the fundamentals looked pretty good. And again, I'm not really talking about conjecture in terms of forecasts. The actual track record of the fundamentals, earnings growth, revenue growth, looked good at these companies. The charts were holding up. And I remember having a talk with my friend a couple years later, and he said, you know what, that was injecting my opinion, and that did not serve me well. He missed out on a lot of the growth in those oil stocks. So to kind of come back to what I'm looking at here on Standard Pacific, SPF, and what that means for the housing market. It's easy to have an opinion. We're hearing all these numbers about home sales coming in better than expected. I'll tell you, I look around my neighborhood. There is construction in this area. Frankly, it boggles my mind. I don't understand this at all, because I don't live in an area with very high employment prospects, though there are a lot of retirees who like this area. But heck, you could say the same about Florida. Look what happened there. So it's you want to keep your opinion out of it and look at what the stocks are actually showing you. And this one, Standard Pacific, now it's smaller than many of the others, the Toll Brothers, the Lennars of the world, trading right now at about $5.35, market cap of about $1 billion. Now, it does have quite a bit of liquidity here, about 3 million shares a day on average. And that's just because, this is a sector that gets a lot of attention. This has been a name that in recent weeks, so I'll just take a look. You don't need me to kind of give commentary on it. I can just show you. Let me go to the daily chart here on Tiger TV, and it's taken its time. There we go. So you can see what it's done here. If you're watching Tiger TV, in the last few sessions, bounced off that 50-day very nicely. Really getting very good support there. That is what you want to see. And even when it made this big pullback here, and I believe that was right along with the general market, on a couple of these days when the market itself was showing some big declines. But look at that. Nice support right at that 50-day line. Now, the one thing that would kind of be preferable, obviously you had the biggest day of volume was this downside day back here on May 17th. But what you would like to see is some heavier volume to the upside. You've had just some very kind of moderate gains here. Nonetheless, this is one to look at. The earnings estimates, and again, as I always point out, the reason that I look at the estimates is, and this is something that I was taught back in those years that I was at Investors Business Daily, not to be using as something for to determine whether or not you're going to make a buy or whether or not you're going to sell the stock, because the technicals are going to generally, most of the time, show you a problem in the fundamentals well before the report hits and you start to see the estimates going down. Okay? And I'm not talking about some of these analysts' upgrades and downgrades. A lot of that is just noise. A lot of that is just noise. Those effects are very short-lived, and they're talking to each other, not to us. Okay, so the reason I'm looking at these estimates, let's see, 2012, Standard Pacific expected to report 19 cents a share, which would be a gain of 280% over 2011's 5 cents a share. In 2013, expected to report 29 cents a share, that's up 53%. Now, these can be wrong. They can overestimate. But one of the things, if you do look into this a bit, you realize, and there is some research to show this, they are often, the analysts who publish these numbers are often wrong to the downside as well. In other words, they're underestimating it. So this is just kind of shows you the degree of confidence at any given time and whether or not the institutions might be likely to jump in there and take a position. So, okay, that was a little bit of a tangent I got on there, but I think, how did I start that? Oh, yes, from one of the comments in the Tiger's Den, and if you're not in the Tiger's Den, always a great conversation going on in there, great questions coming up, so just, that was, I'm glad that came up, though, because that gave me an opportunity to kind of talk about a stock there and talk a little bit about some of the methodology that we are using in the Low Price Leaders newsletter. If you're new to the show, what that newsletter features is stocks trading between $5 and $12. That's the low priced part of it. And of course, the show here today is the Small Cap Roundup. We feature small caps, meaning, I tend to focus on stocks with a market cap of $2 billion or below. I know that by some measures it's $3 billion or below, and I'll talk about those in here too on the show because, that mid-cap universe is something else that can be quite constructive for individual investors and often kind of gets lost, like the middle child, right? Kind of gets lost in the shuffle between the large caps, the blue chips, and some of these upstart small cap names that tend to get focused on. So I do talk about the mid caps a little bit in here too. I don't look at the small cap world as a vacuum. I look at it in the context of the overall marketplace, looking at technicals, buying into strength. That's the methodology here. I'm not looking for stocks that are on the downswing. I'm looking for stocks that are showing signs of institutional buying, using the fundamentals, particularly earnings growth, driven by sales growth, as just a screening mechanism. And there's some other fundamental screening mechanisms that I use as well. Do like to see growing cash flow. ROE can factor into it. There are a few other methods. And when it comes to the technicals, it's not price is the main one, of course, but I do look at volume. I do look at moving averages, moving average crosses, looking at often how a stock will perform intraday, how the buying and selling looks on an intraday chart, particularly a 5-minute. Okay, we'll come back in a few minutes. I want to talk about some other stocks that are showing some strength today. Talk about a few of those when we come back. I'm Kate Stalter. This is the Small Cap Roundup.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the Money Game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the Money Game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right, we're back. You know, one of the big stories of the last few years, an ongoing story, you know, just in terms of a sector that has enjoyed a lot of market strength, has been retail. In many facets of retail, apparel in particular. And, you know, again, that's one of those things that if you kind of went by opinion, if you went by the news, if you just sort of if you were watching the news and hearing all this bad news all the time, how everybody is not spending money, you wouldn't think that some of these clothing retailers would be doing so well. You would, obviously, the Ross stores, for example, some of these discount names have done well in the last few years, but also some more higher-end ones. I just kind of was running some scans earlier this morning. I just put one up there on Tiger TV. Now, this is actually a mid-cap by my definition. It's a small cap by other definitions. This is Chico's Foss. I'm sure many of you know this. Market cap of about $2.6 billion. Good liquidity in this one, too, about 2.6 million shares a day. They're having a sale, by the way. I'm just saying to the ladies who are listening, I got an email from them today. They are having some kind of Memorial Day sale this weekend. So if you have one near you, might want to go check it out. Let's see. This is just taking a look at the chart here. Now, it's kind of, I put it up there on a daily chart for you to kind of show how it's getting support relative to its 50-day line, but I want to show you this chart on a weekly as well. Then I want to move on to a few other retailers. Now, this one here, if you go back to the beginning of this consolidation back kind of where I'm indicating, which would have been actually back in July of last year. So it really has not completely bounced back as much as some other stocks have coming out of that big correction last summer. Kind of had another pullback then. And is now kind of in the last several weeks forming what you might call little kind of handle area to this bigger formation. And yeah, on this particular weekly chart, just the size of this, it's kind of scrunched together, so it's not really smoothed out so well. So it looks a little more sloppy than it actually was. Not such an unusual consolidation really, but some good chart action in the past few weeks, so could be one to watch. You might be looking for some kind of intermediate buy point on this one right now above, let me see here, 1607. But as always, market conditions really play a role in what you're going to be looking at here. Because if the market does remain in a downtrend, which it is, I mean, you could see today it's still struggling, and it just seems to be. And again, I'm not going to forecast because you just never know. You get surprises all the time when it comes to when the market takes off in one direction or the other. But it really has seemed in recent days, like with all this European news continuing to hang in the balance, that investors do remain skeptical, to use a word there, for the most part right now. So that's something that could be putting any possible imminent market uptrend in jeopardy. I know a lot of people got really excited in the mainstream media a few days ago. Was it Monday that we had that big upside day, and there was all kinds of speculation about, are we in a rally? But the folks need to fill hours and hours and hours of airtime every day, and just tune out that noise. I know most of you there in Tigerland, you do understand very well to tune out all that kind of noise. Let me take a look at, let's go to another one that's another clothing-related company that is, again, I've got to get the right keyboard here. There we go. That's showing a big move today, and that's Phillips Van Heusen. You never pronounced that right. PVH is the ticker. That's how I remember it. Showing it to you there on a weekly chart. Had a big consolidation. And let's see. This was an earnings-related move. I think I heard that this morning here. Yeah, they reported before the bell. And along with HPQ, also getting a big move up. And see that nice bounce there? Let me put this back up here on a daily chart for you so you can see. There you go. The nice gap up there in Phillips Van Heusen today. This is another mid-cap market cap of about $5.6 billion. Good liquidity, more than 1 million shares a day. All right, we're going to come back, look at a few more of these after the break. I'm Kate Stalter. This is the Small Cap Roundup.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You are born to be a money master, and I'll teach you how.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Indeed. Okay, I put up a chart there on Tiger TV of another company that reported and is getting a nice boost today. Let's see, put up the daily chart there. So there, yeah, you see, actually, right, second day in a row that this is happening. I remember this big gap up from yesterday. And PetSmart, another mid-cap. Let's see, market cap right around in the $6 billion, actually about $6.9 billion, moves about 1 million shares a day. Now, this is one, you know, when I saw that earnings report, I was proud that I played my role in supporting their revenue over there at PetSmart. They had, let's see, a 9% year-over-year revenue growth to about, let's see, $1.6 billion. Not too shabby. Okay, so yeah, I do my part in supporting PetSmart. I've got a pit bull and a couple cats, and the critters are expensive. They definitely are. And I know a lot of us. Place is always crowded every time I go in there. So let's see here. Let's take a look at the weekly chart. You know, this is one, you're kind of seeing a little consolidation here. It's been consolidating in a pretty healthy fashion. Now, one thing, let me go back and let me show you something here that's interesting to talk about here on the weekly chart. And again, I realize we are talking about a mid-cap here, but I want to talk a little bit more about some of the small cap retail names. I'll come back to those in just a moment here, but just kind of setting the stage. But there's a good little reason to analyze this chart here, and this would apply to a small cap, a low price stock, a large cap, anything really. You see this area of consolidation that I'm indicating right here. Now that's the second time it's paused to form kind of a basing area. Here's the first one. Now you see what happened was it pulled back below. It's kind of hard to see it on here. I'm indicating on Tiger TV back in, I'll tell you the dates that happened, back in sort of the early spring, March and April of 2011. Right in here, it formed a very shallow, kind of flat little area of consolidation. And then back in the summer, of course, when the whole market broke down, PetSmart fell along with it. We've looked at many, many charts on this show of stocks that underwent this phenomenon where you did see them fall along with the market last summer. About 3/4 of stocks will tend to do that. So basically what happened here, you see on the chart, if you're looking on Tiger TV, and I'll tell you if you're not, it fell to a low of 37.76 in August of 2011, which by far undercut the low of this earlier little consolidation from the spring, and the low point back then was around $40, around $40.05. So as you see, what happened in the summer undercut that prior low by a long shot, flushes out a lot of the investors and traders who no longer have conviction. And you know, a lot of the investors and traders who are lacking in conviction in individual stocks and in the market got flushed out over the summer, and that helped set the stage for subsequent rallies that did happen. So right now, this is the second little area of consolidation after that big pullback last summer. This second area can be particularly constructive because you get a lot more institutional investors whose attention is drawn to the stock. Obviously, after that earnings report, you are seeing more institutional investors getting interested in this. And that's a productive area because you have new money coming in, but not so, you're not at the point yet where the new money's exhausted, where the institutions are no longer saying, let's put a lot more money in here. So that second area is a good place that can attract additional investment. And you did have a little pullback there, and in addition to the earnings report, that probably did help make some of the valuations a little bit more attractive to the fund managers after the stock was pulling back from these recent highs. And as you know, if you've listened to the show, we do have some of these fund managers come on and talk to us every few weeks. We had a terrific guy from Scout Small Cap a couple weeks ago, Tom Lamming, and they will explain. They are looking at these fundamental valuations. So that's a reason that they will get into a stock if they look at these PE ratios, and that's what they mean when they're looking at fundamental valuations. Make no mistake, they are looking at these PEs, and that is a way that they make their buy and sell decisions. We can just follow in their footsteps. So right now, PetSmart looks pretty good, and if this were a bull market, this could have easily been a good buy candidate. Now, what'll undoubtedly happen here? It'll rise and begin to consolidate at some point, and give you another little area to watch there that we can keep tracking. And when the market does go into a new rally, this could offer a new technical entry point. So just one to watch. So wanted to kind of use that mid-cap name as a way of just kind of showing a little bit about what some of the particular chart formations, chart characteristics that I am going to be looking at in the Low Price Leaders newsletter to determine an entry point. I always do this. I start talking about the stocks. I start talking about the I get into what I'm discussing, I neglect to give out the phone number, 877-927-6648. We definitely have time today for some calls, quite a bit of time today for some calls. So if you want to talk about a small cap or low price stock or any other stock, really, toss it out there, and we could take a look at the chart. 877-927-6648. Okay, let me move on here to a couple other, some of these names that have been rallying in some heavy volume. Let's see. I'm going to put one up here called, let me get the right ticker here. It's Arabian, ARSD, American. Okay, Arabian American Development. Now, I think I had this on our watch list in the newsletter a few weeks ago, and then it kind of broke down a little bit to some levels I didn't like, but yeah, there you go. There you can see that. It kind of pulled below that 50-day line back in here. Was not acting very well. Even as the market was in a little bit of an uptrend there briefly. You saw a couple of upside days, but this one did not really participate and then fell as the market itself was weakening. Getting good support now along that 50-day line, so it's kind of redeeming itself a bit. Now this is a company. It's based in the U.S., but they have operations in Saudi Arabia, developing some petrochemical opportunities, mineral properties over there. They also have some operations in Europe. We'll try not to hold that against them. But getting good support right now above that 50-day line, so I do like that action. Terrific estimates in the next couple years for some outstanding earnings growth. Let me see here. 86% earnings growth expected in 2012, 43% growth in 2011. So this could be one that might make its way back onto the watch list. It's a small company, market cap $241 million. And it trades very thin trade. And this is one of the reasons, too, that I was pretty quick to cut it from the watch list. 89,000 shares a day. These things can be extremely volatile. And it is a low-priced. Actually, let me see here. Where is this trading right now? Yeah, it's on the low-priced list, trading at about $10.37. Okay, so that's just one that caught my attention. Wanted to kind of show you what I was looking at with regard to this one and why it has come back. Now I see, okay, Art is asking about AMM. I'm going to come back to that one in just a few minutes, Art, okay? I have a phone call from Jason in Spokane, and I know how to say your city name right.
Spokane, yeah.
How are you, Jason? Thank you for calling in.
Doing well, thank you.
Good,
yeah,
good.
Looking at Hain, it has way above its 50-day. It can't seem to break the 56.
Right,
55,
right.
So what's it going to take for either to break that or for it to prove that it's a short?
Okay, let me take a look. This is one that I've followed for a while. I didn't look at it today, though, and actually in the past week or so, because it's been consolidating here. Yeah, this is one I like. I wrote about this a few weeks ago for MoneyShow.com. This is a mid-cap, market cap of about $2.4 billion, moves about 519,000 shares a day. I got to tell you something. Right now, the way this is holding up, I wouldn't even. The way I view stocks, this is showing a lot of strength. There's nothing to me right now that suggests this would be a short candidate. Nothing at all, because it's holding up so well right now. What would serve as the catalyst here? Could be the market. When does this company report earnings? Let me pull this up and see. Yeah, let's see, because that obviously that's also a big mover. Let's see. Okay, it looks like August, maybe early August. It's expected to report. So May. Wow. So probably. Yeah, and you know what? It looks like. Let me. I think it did get a little bit of a boost earlier this month on some earnings. So. This is right now. Jason, if you're like me, it's tempting to get impatient in these market downturns, particularly when you're looking at a name like this one that is obviously showing strength, but you've got this poor market that's the weight.
Yeah.
That's holding this thing down, And when the market does go into a new uptrend, it's like the weight is removed from the top of this thing and it can just take off. And you see that so often. This reminds me a little bit of, I talk about this a lot, back in 2009, Green Mountain Coffee Roasters was one of those that was holding up really well. While particularly towards the end of that market downturn. And then when the market went into a rally, Green Mountain was one of those that just took off. I had been tracking it for quite some time. Even if this does clear that prior high that you were just talking about, and I agree with you, I'm watching that one as well. Looks like it's about, just below 56. Potentially it could clear that any day now. And I personally avoid new buys in these kind of market conditions just because it's in a market downturn, when the market's already been trending lower and a new rally has not been confirmed, it's way too easy for a whole new bout of emotion-driven selling to take everything down again. You see it all the time. Yeah, so, even the strong stocks can get dragged down again. If you're particularly aggressive and don't mind jumping in a market downturn, then this thing looks really good right now. I think it looks terrific right now. And in a bull market, I wouldn't hesitate. So let's see. I think I'm being told to say Jason is listening on Money Talk 1230 KSBN. Okay, that's your station up there in Spokane, huh?
Yes. Yeah.
Oh, great. Wonderful. That's terrific. That's terrific. Well, Jason, I hope that helps. Great question. I like this stock, too, and in a bull market, I think this would be a buy candidate. Personally, I'm going to hold off right now, but I'm glad you asked about it. Terrific company. So thanks for calling in.
Yes, thank you. Bye.
All right. Yeah, the whole natural and organic foods movement is really taking on. We had that big IPO, and I'll pull it up in a minute here, but I want to look at, I messed up here, so I'm going to have to take the camera off there. If you're watching Tiger TV, put it back on. And there we go. Okay, I think I got it on there again. What I want to do is, I'll tell you what, I'm going to come back to that AMM stock in a minute here after the break, and I'm going to pull up this IPO, this recent IPO here we had of a stock called Annie's that got a lot of attention when it went public not too long ago. Again, as I was saying to Jason, it's not at all surprising to see all of these stocks getting weighted down in the market pullback that we are undergoing right now. And, this also, if you look at the chart here, you're seeing it kind of pull back along with the market. All the chatter about Facebook, I've mentioned this a few times, it's really not unusual to see pullbacks after an IPO. That's why it's much better to wait, let a stock build some trading character. Now, there was a little area, I'll go back to a daily chart here. I've got a few more seconds I can show you this if you're watching on the Annies, and the ticker is BNNY. There was a little area, brief area of opportunity to enter this stock, let's see, back in April. And then as the market itself went into a downturn, the stock pulled back. So you could have jumped in there as it cleared a little consolidation in late April, rallied to a high of 45. Okay, I'm Kate Stalter. This is the Small Cap Roundup. We'll be right back after these messages.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, another day here that's just flown by. Let's see what we got here. Yeah, we got the S&P. We got all the indexes struggling at this point. This just, you just day to day, that's what makes market conditions like this so risky for any kind of new buys. Because, we saw what happened yesterday. We had that big uptrend in the later part of the day, and apparently, based on some kind of mistaken tweet that came out of the summit of the European leaders in Brussels. Then today, some of the U.S. econ news giving investors some pause. So just really, really still seeing a lot of indecision in the markets. Just makes this a particularly risky time. I've put up a chart there, by request, AMRN. Now, this is one, as soon as I figured out which stock we were talking about here, I recognized this immediately. I've been watching this chart. Amarin, Irish-based biotech. They make cardiovascular treatments. This is one of those. It's got some indicators that kind of could point you in either direction. The chart itself, I'm liking this support kind of just below that 50-day average. Not great right now. Definitely not anything that I would consider buyable at this particular moment. And it's not really something. It's below its 10-day moving average, even a little bit below that 50-day. And that's something that I'm just not liking at the moment, but it could have some potential. Now, let's talk about the fundamentals. This is something I bring up frequently, particularly with regard to the biotechs. You can treat these a little differently when it comes to some of the fundamentals if the technicals look good. These do kind of fall into the realm of the story stock, but I'm never going to make a buy based on the story. It's always going to be on the chart. When I say story stock, what I mean by that is something with no earnings. Now, this is as yet unprofitable, expected to show earnings of 19 cents a share in 2013, a loss of 95 cents a share this year. Right now it's still in the developmental stage, and there's really no revenue to speak of. Now, biotech, very common. That can happen, and that's not at all unusual to see a stock performing well technically. So what's the upshot on this one? It has some technical potential. It's not there yet. Could be one to keep an eye on, but again, and even with these stocks, the euphoria that goes along with the general market uptrend could affect even something that you might think would have no relationship to that. Everybody kind of freaks out a little bit when they hear about any kind of European company, but very often, depending upon where the company's sales are going into, you have to take a look and see, is European business really affecting this? This is a company that recently got a patent in the United States, so obviously there's some business over here. So, yeah, okay, just one to keep watching now for a while, in my view. Okay, so let's see here. We have got just a few more seconds in the show. Let me just show you one more small cap that I have been taking a look at here, and we'll kind of just go out on this one, PKT. I'm going to talk about this one next week. It's one I've talked about on the show before. It's a tech. This is Procera Networks consolidating below that. Let's see there. There you go. A little consolidation there below the 50-day line, but it is one that I'm continuing to watch a bit. It's not one of our watch list stocks now, but we'll come back to it. I'm Kate Stalter. This is the Small Cap Roundup. Have a great weekend. Join us back here on Tuesday for the show.